Welcome to part 3 of the Algo trading series. Today we're going to talk about the opening to your algorithms. Now, what I mean here is specifically when the algorithm will trigger and go into a trade. It can be either a long trade or a short trade. It doesn't really matter. But this is the trigger condition. And it can be very simple. It can be as small as one indicator. So, for example, a MACD. It can be two indicators combined, like my free one, the MACD ADX crossover indicator, confluence indicator, where those two, when they're facing the same direction, will indicate an opening, either a buy or sell signal, or it can be a number of things. Now, for example, I have an algorithm based off of the ADX MACD confluence indicator that has that, as well as several other opening conditions associated with it that, as a user, you can turn on or off. So, for example, in addition to those, I have the ability to go with volume. It uses cumulative volume delta to determine whether volume is coming up or going down in the underlying, as long as it has volume anyway. Some instruments don't have volume, but as long as it has volume, that's what it can determine. So if it wants to go long, it has to also find rising volume. Now, I've also found a lot of benefit in using a moving average to help determine when an algorithm can open long or short. And I will show you examples of all this stuff in just a moment. I'm just kind of going over it. But so for example, all of my algorithms have built into them the ability to choose some sort of moving average. You can use an exponential, a simple, weighted, a whole. There's a whole bunch of ways to determine a moving average. And then you can choose, of course, whatever length you want. And if the stock comes above that moving average, then it could be in position for a long play, and it will only take longs at that point, as long as the rest of the factors are consistent with that long opening. Same thing, if it goes below that moving average, then it will only take shorts. There is also the ability to trade contrarian with the same method, right? So a lot of people out there are contrarian traders, where if a stock is on a long upward move, then they're going to look for it to hit a point of resistance and bounce back down a little bit, and that's that contrarian trade. And you can also program that into your algorithms. Mine have that programmed in, where when you're going long, where when it's above the moving average, it'll only take contrarian trades, so it'll wait until it finds a short while it's above the moving average, so it can do that. And then you can use something like a static take profit. If you're on futures, like 4 points or whatever, to scalp that contrarian trade. So in that way, you can change how you're using your algorithm on different tickers and different time frames. So, for example, that sort of contrarian trade's really only going to work best anyway on like the 1 or 3 minute time frame. It's something that's a lower time frame. Whereas if you're on a higher time frame, if you're using this to swing trade, use mine to swing trade too. If you're using it to swing trade, then you're probably going to want to go with the trend. So if you go above that moving average, you're going to look for your opening conditions to find a long, and then it takes a long. So to kind of recap there, the opening conditions can be either simple or complex. It depends on what you want to do. And as you write your algorithm, I really suggest in PineScript you can set it so that individual settings will or will not work on that ticker. So, for example, if you wanted to use volume, there's a little checkbox. Make a little checkbox says, yes, use volume on this ticker. Or, uncheck it. It says it's not going to use volume on this ticker, because Like I say, besides certain instruments not having volume, you may find that certain tickers, certain time frames will perform better not using certain filters, if that makes sense. Clear as mud, right? So that's really kind of an overview. I guess my main takeaways for you there are: keep your main opening and closing condition relatively simple. I tend to follow trend with mine. There's different ways to follow trend, and the fact of the matter is that you can go look up 30 different strategies on YouTube that are all, back tested or whatever, and most of them are going to have a better than 51% win rate, which is great, which is all you want. As long as you can get a main opening and closing condition that has a better than 51% win rate, right? Then the rest of your algorithm, so your filters for that opening condition, right? So volume's the wrong way if we're not above a moving average, that sort of thing, will help filter out some bad ones. Our trade management will help to stop us out and take profits where appropriate. And our closing conditions will close that trade when the opening is no longer valid. So our main opening and closing condition, so for example, the one that I'm going to be using throughout this video is the ADX MACD confluence. That is our main condition, and that's what the entire algorithm, that algorithm anyway, was built around, was finding those confluences to open and close positions. The rest of the stuff, volume filters, volatility filters, trend or contrarian, those sorts of things are what I consider to be filters on top of the main opening closing conditions. So let's dive into some charts here. So here we can see today's chart, and I'm going to show you why opening and closing conditions should be fairly simple. So here you can see on the chart, this is my ADX MACD confluence indicator. It's exactly what you see here, has the colors, sell, buy, it's completely free. Just search for Trader's Ultimate Edge or TUE ADX MACD, and you can find that for free on TradingView. I made a video about it as well, which I'll link down in the description below. And it has the code for this. So you can just copy and paste the code out of that to get these buy and sell signals to start your algorithm with. So let's look here and we'll see a little bit. Now what it's looking for is the confluence, right? So here we've got MACD in a long as we come into the day. And right here is where we see the crossover happening, and that's where it captures our buy signal, right? So this, and then the same thing happens over here with the sell, right? This is where we get the confluence. MACD was already in a downturn, but this is where it gets the confluence right here. So we can see these things happening. These are, well, in this case, so you've got an opening condition right here, right, for your algorithm. Now, depending on your settings, it may or may not take the trade, but we're just going to say, this is our only opening condition. It takes the trade, and you can see here it falls out of confluence, right? So the white means that it's fallen out of confluence. The green means it's again in a long confluence, and you can see that happening here with the MACD. The MACD falls to a short. That's why this falls out of confluence. But this still shows long, so that's why we haven't seen that sell signal yet. That's why that confluence is such an important thing. And I keep saying that word, confluence. Get that in your mind, because you want multiple indicators telling you the same thing. Never just go off of like one. Now I do say keep your opening conditions simple, but use some things to filter them out. So in this case, this is the confluence. Now let's see if we would have had any volume confluence right there. This is my cumulative volume delta indicator. do have a video about it on my YouTube. Okay, so you can see this yellow line coming up right here, and also the blue one. So you can see we were having increasing volume. So it would have passed the volume test as well. So with all of these conditions in place, if these were the only conditions that we were looking for, then this would have been a buy, and it would have got into the trade. Now, then what happens is, some trade management, which we will talk about in the next video. But that's going to be, where to take profit. Maybe when it falls out of the confluence, that's a good place to take some profit. Maybe not close the trade, but take some profit, right? Goes back into confluence, take some more profit. Again, we'll talk about that in the next one. But this is what I mean by opening conditions, okay? So your main opening condition here would be the ADX MACD confluence. A filter would be the volume. And then another filter I had mentioned before, moving averages. Grab a moving average here. Exponential moving average. And then we'll use, just for the sake of demonstration, we'll use like a 200. Okay. Right there. You see that come up on my chart. Okay. So in this case, you'll notice we've got our second trade signal here, this sell, which was a good trade. That was a really good trade. And actually my CVD caught that as well. You see right here, this indicates this lower peak right here, even though it's a higher in price. That indicates the stock's about to fall, which it did. So it actually caught that. But anyway, this normally wouldn't have taken the trade, and this would have, because we're above the moving average, if you're using the moving average to help filter out trades. Now, you may be looking at this and you're like, well, Tony, I would have missed a great trade. And yes, you would have. But one trade is not what we're trying to do. When you're trying to trade algorithmically, you are trying to win the game of numbers. You are trying to win the overall profit and loss. So if you can filter out trades that otherwise, if you filter out more bad ones than good ones, then you're winning. So for example, even though we would have got this one sell, what if by not using this moving average, we would have had a whole bunch of trades that failed and would have taken us into a negative profit and loss situation? That's one of those things that you have to think about as you're building your algorithms. And that's why I also say it's really useful to have your algorithms set up so that you can turn things on and off. So for example, we'll go over here. This is a scalping program I'm playing with on NQ. It doesn't trade a whole lot. Like over the last 2 months, it's gotten 24 scalps, but they're almost all profitable. 95% profitable, $8,200, and I think that's using only 2 contracts. So you can see this nice upward equity curve. So it works really well. But anyway, what I'm doing, and you can see here, this is the settings for the Argentum algo, not the ADX MACD. It allows you to filter things out, right? So we've got the direction control. It can go long, short, both, trend or contrarian. You can choose which times of day you want it to trade. You'll see I cut out lunch right here, and I force trades to close at the end of the day, so I don't want them swinging with this. And then what you can do, so here's like filtering out areas of low volatility. Here's adding volume length, that sort of thing. That's why I say to do that and set it up that way so that it has check boxes here. So that it's got, like right here, like a checkbox. You can turn it on and off. So it makes it really easy to back test your algo in TradingView. And so that way you can see, well, does adding the volume help me or hurt me? And you can do it really easy. And the thing is, I recommend doing it with checkboxes because you're going to spend a very large amount of time in that settings screen, in the backtesting screen, turning things on and off, changing lengths and whatnot, until you really get it down well and you know the exact process to do. That's where you're going to spend a lot of time testing these algorithms. And we'll talk a little bit about backtesting a little bit later in the series, because it's a very particular process, and you want to make sure you do it right so that you're not subject to backtesting bias. So anyway, that's why, you know, we might use something like this moving average. So it's above the moving average, it's trending up. And you can even use like a crossover. Oh, for example, we'll toss another one on here. And we'll do just like, say, a 50, probably fine. Style, let's change the color so we can see it a little better. We'll go black. Okay, so as long as the short one, as long as the short one is above the longer EMA, right, that means the stock is trending up. And we can see over here, now it's coming back around, and we could have that crossover and starts to trend down, right? That's technical analysis 101, is moving average and their crossovers. Okay, so you can use something like that as well. Is this moving average higher than the other moving average? You can make them dynamic. Is the difference between them more than some amount of volatility? You can use things like Bollinger Bands, for example. And I want to actually do this. I think there's something interesting in using Bollinger Bands for an algorithm, and I'm theorizing on it. I'll probably do it at some point, but you know, so you can use something like, is it above the midline, right? So this, I think this is actually an ATR. No, this is a moving average. So if it's above the moving average, but it's below the edge of the Bollinger Band, then it can go long. But if it's hitting into the Bollinger Band, then wait to open, because it's probably at a maxed out spot. See, we're not hitting back here, so we can get into it. It's hitting here, and what happened? It fell down and broke the confluence. Comes back up, it hits and it rides the top for a little bit, and it falls back down. Okay? It's not an exact science, but again, none of this is. All we're trying to do is filter out the worst of the trades and keep most of the good ones. Let's see here. We'll use my back tester. It's easiest to see. This is what's called the ATR back tester. It's free. You can just, again, it's under my account, Trader's Ultimate Edge. And what it does is it just shows like a band of the ATRs, and you can put in a length in it. By default, it's 100 candles. And it'll show in the last 100 candles, right here on the right side, how often each of them gets hit. So it's actually really useful. So you can see there that the +3 and -3 ATRs are almost never hit. So you could put a filter condition in there. You know, if it hits the +3 or -3 and everything else says go, wait to open, because it's probably going to bounce back. So that's another example of a filter for your opening conditions. So in summary, you want to have a main condition that you build the rest of the algorithm around. In this case, it's ADX MACD confluence. Then have some filtering conditions that are more generic and by themselves probably not going to open or close trades based off them. In my case, it's my CVD. My CVD is always a secondary tool. I'm never using it by itself to open and close trades. You know, so for example, we see this differential here in these peaks. I would be looking at something else, like maybe this is hitting resistance, or in this case, we see a sell signal right here. We see this volume declining. Okay, it's go time to sell, right? So your secondary conditions should always be things that tell you information, but may not always be enough to trade on their own. That's why moving averages make good ones. Volatility numbers make good ones. Volume make good filters. Those are all really good filters. And the reason I say use things that don't give you enough information to trade on by themselves is because then you get your algorithm so specific to a trade like every 3 weeks that it ends up not being a useful algorithm. So that's what you want to do. Get Very simple main opening, an opening indicator, right? Or confluence. Get a few that you can filter out with. And that is the start of the opening for your algorithms. And in the next video, like I said, we'll talk about trade management. So that's going to be, where do we take profits inside the trade, right? So we have our whole trade here, our open, and then once we get a signal in the opposite direction, we should obviously close the trade, right? Now you can close and reverse if everything else is in place for a short. In this case, it wouldn't have been because it was above my moving average. You can reverse though. I've theorized and messed around with one that will reverse on the SPY all day long. I have yet to really make it profitable, but you can do that. So in this case, my main opening and closing, giving me a sell in the opposite direction is going to be to close the trade. So right here, trade's closed. No matter how much is still open, whether it's 1 share or 100 shares, whatever it is, trade's now closed. And then I just wait for the next signal. And that's kind of how we're going to close it. There's more to that, and we'll discuss it later on. But in that next video, like I say, we'll talk about stop losses. How can we find stop losses? How can we find break-even points where if it goes up and comes back down, that's where we now will close at our open instead of a stop loss? How do we take profits? That kind of thing. And we'll discuss all of those from the perspective of doing this algorithmically.